21st Century Entrepreneurship with Martin Piskarik.
One of the major problems that I see with businesses as well as individuals is people have not been taught how to keep, protect, and grow what they earn. Because it's not about what you make, it's about what you can keep. And the system is made to take your money. The tax code is written for businesses, and most people are unaware of both. My name is Dr. Sherry Peel Jackson. I'm a retired Internal Revenue Agent for the IRS, certified fraud examiner, and retired CPA. And I help people around the world learn to keep, protect, and grow what they earn so that they can leave a legacy for their families. I call the IRS the insidious representatives of Satan. And that's because they take money from you, usually the small business owner, and do things with it that you would never want done with the money that you earned. So I'm about helping people stop feeding the beast and keeping the money by, first of all, keeping it, learning how to keep it, learning how to protect it, and then learn how to grow it. Let's talk about keeping what you earn. And that's the basics. That's for individuals and for businesses. So keeping what you earn is about making sure that your expenses have a cap on them. A lot of people every year spend millions of dollars on conspicuous consumption. What I mean by that, the Nike shoes and the $2,800 purses and the $28,000 purses and whatever the self-esteem issues are that people have, I don't know, but it keeps people broke, busted, and disgusted. So one of the basic things that I teach people is, first of all, get your expenses under control. There are several simple ways that I've learned and that I've used to keep expenses under control. One of the major ones is don't go to the grocery store hungry. Every time I used to go to the grocery store hungry, I'd spend extra $20 on food that I didn't need. Usually it was junk food. So now if I'm hungry on the way to the grocery store, I'm going to stop and get some small snacks so that my stomach will be fulfilled and I won't be grabbing everything off the shelves. Some other ways are to get rid of the cable TV. Now, I don't have TV. I do have the screen, but I don't have television because I call that the electronic income reducer and the electronic intellect reducer. While you're sitting there watching As the World Turns or As the World Burns and whatever else they have on television, you're making those people rich. And that time could be spent making sure that you earn more for your family. So getting rid of the cable television, which has thousands of channels that you won't ever be able to watch at once, and making sure that you read books, read educational books, things that are going to uplift your spirit and things that are going to help you earn more money. One of the other ones is not shopping in the major stores like the Macy's and the Needless Markup and all those. Go to the thrift store. I mean, I've gone to the thrift store and gotten $700 worth of clothes for like $70 because you go in, you look at these clothes that they have, and then you get what fits you. And then if it doesn't fit, you get it back. But you're spending maybe $12 on a suit that would otherwise cost $70 to $120. And every little bit counts when you don't have money and when you intend on building a legacy. It all starts with one step at a time. One other one that I'll mention would be when you are in the winter, you have a space heater that you take from room to room, as opposed to putting your thermostat on high and having a $300, $400, $500 bill. And in the summertime, when I was younger and when I didn't have a lot of money, I made a portable air conditioner. It was a little bitty cooler, and it had 18 frozen bottles of water in it and a fan that faced down onto the frozen water and a spout that came out to cool me. And the hardest thing about that really was changing those 18 bottles of water 2 or 3 times a day. But at the end of the day, my bills were lower and I was able to take that money and use it to grow my business and invest. So that's basically what I have in a nutshell for keeping what you earn. When you talk about protecting what you earn, that's very important. It starts out with insurance. Insurance is important because when some catastrophe happens, if you don't have insurance in place, it can ruin your business and ruin your life. So, having insurance, we all are basically required to have homeowners insurance, car insurance, and any kind of business insurance. For example, if you are a professional, you need some kind of business insurance to make sure that if you get sued, you have help from a lawyer. This is the United States of America. We have 5% of the world's population, but we have 70% of the world's lawsuits. There are more lawyers in Jacksonville, Florida than the whole of Japan. And with that said, at least 1 in 3 people are being sued every year. So you need to protect what you've already earned with making sure that you have insurance for your business also, not just your home, not just your car. The next one is assurance. Assurance means that you have at least 6 months in expenses saved up, not necessarily in a CD or something like that, but really liquid, like maybe just in a bank account or even somewhere at your home. Because when things happen, and sometimes things happen, you need that cushion so that you can have 6 months to figure it out for yourself and how you're going to go forward. And those are two parts of protecting what you earn. And of course, you want to protect yourself from the IRS. Your business and your personal finances are yours, not theirs. So when you learn that the tax code is written for businesses, you need to start a business. I've worked with several clients that have 6 figure incomes and they're getting eaten alive by the IRS in taxes. They don't know what to do. What I tell them is you have to start a home based business. I say home based because you don't want to have an extra mortgage or an extra rent somewhere else. Do it in your home. And when you have a legitimate home based business, you can write off everything but the kitchen sink. So, Internal Revenue Code Section 162 says that all ordinary and necessary business expenses are deductible for your business. So, what is ordinary and necessary? Well, let me give you an example. In, I believe it was 1994, there was a woman named Cindy Hess, and she wrote off a breast enlargement. Yes, she did. And the IRS saw her tax return and they took her deduction away and just laughed at her. But Cindy was sure that she was able to get that deduction, so she got a lawyer and went to tax court. And guess what? Cindy Hess won the right to write off her breast enlargement because Cindy Hess, better known as Chesty Love, was a pole dancer. And that breast enlargement was going to help her keep up with the competition. So the tax court said it was an ordinary and necessary business expense. Ordinary and necessary is common, helpful, appropriate. So those expenses are common, helpful, and appropriate expenses. And that was helpful and appropriate for her. And she got a chance to do that. So if you have a home-based business, you should never be scared to write off your legitimate expenses. So when a client comes to me and they have a W-2 job making 100, 200, $300,000 and they say, I'm never going to be able to build my income. I'm never going to be able to save for a house because my taxes, the taxes. So we start a home-based business. I sit down with them and we figure out what will work for them based on their schedule. And we start learning how to operate the business, when to operate it. For example, coming home in the evening, you have a family. You come home and you decompress, but as opposed to turning on the television, you spend an hour or two or maybe even three working your home-based business. On the weekends, work the home-based business. There are some people that like to watch television all weekend. There are a lot of men that'll sit and watch all the college games on Saturday and all of the pro games on Sunday. And what I tell them is, until Tom Brady or one of those pros start writing me a check, my team is the Jackson team. So we need to concentrate on building these businesses. And then as we build these businesses, we have the write-offs. Let me give you an example. Someone's making $100,000 on a job, getting eaten up by taxes. So they start a home based business. They have all kinds of expenses. For every 2 miles you drive, that's $1 of a write off, because the standard mileage rate is always over like 60 cents per mile. So that's a write off. Your supplies are write-offs, your mortgage or your rent. There's something called business use of home. So as long as you have a specific exclusive area where you do your work at home, whether it be a bedroom, a basement, or even part of a room, you get to write off your mortgage or your rent, and then you get to write off your utilities and other. You also get to write off your cell phone. That's something that an employee can't do. You get to write off your internet and lots of other expenses. Your advertising. When you hire a professional, that is also tax deductible. So I have several clients that now have home based businesses. At the beginning, of course, they're going to make losses because they're not going to have the clients yet. But when they start growing, they use that extra money and they build a legacy. They start buying assets. That's when we move to growing what you earn. So you're growing your home-based business and you say, okay, well, I'm starting to make a little bit of money and I want to make sure that my family is well taken care of while I'm alive and then when I'm gone. So what do I do? A lot of people invest in different things. I'm one of those who only invest in things that don't disappear in the blink of an eye. I invest in silver, gold, and real estate. So you start buying gold. Now, gold is up over $3,000 an ounce right now. When I started buying gold, it was $313 an ounce. When I started buying silver, it was $6.16 an ounce. So they've obviously appreciated in value. I have several pieces of real estate here in the United States and abroad so that there's a legacy built for my family. You want to make sure that you leave your family in a better situation than they started. And that's growing. There are a lot of countries right now that are, being in this situation with the tariffs. But if you look beyond that, there are still ways for you to grow in whatever country you are right now and grow in other countries. We need to start looking at things on an international level. The world isn't small like it was in the 40s and 50s and 60s. I mean, it isn't big like that. It's very small now. Across the pond is almost just like across the pond. It's not necessarily large like the Atlantic anymore. So what we need to do is we need to say, okay, what do I want from my family? And how do I get it? There's an exercise that I do at the end of every year. I take the last 4 days of the year to complete an exercise, and it's called Questions to Design Your Future. And I'm going to tell you the first 3 questions to this questionnaire. The first one is, what do I want? That's very important. The second question is, why do I want it? In other words, why is it important to me? And the third question, and I think is really, really the deepest question, is, what am I willing to give up to get it? So people have to look inside of them and figure out what it is they're going to give up to get what they want. If you want to lose weight, you're going to have to give up the cookies, the cake, the pie, and the ice cream. If you want to grow your wealth, you're going to have to give up a lot of recreation. Not family time, because I'm all about the family, but definitely we, especially in the United States, spend too much time entertaining ourselves. And that's what's making us broke, sick, misinformed, And we don't need to be that way. So it's time to start putting this system that I used in place for myself, keeping what I earn, always finding ways to make sure that I can save, not in a way that's going to compromise the quality of what I'm buying, but making sure that it's not overpriced. If I'm going to be able to, for example, I put a sunroom on the back porch. Well, I'm going to go and look for bids. I'm not just going to go to the person that's advertising out there a lot because they have advertising expenses to take care of. I'm usually one that's going to I'm going to hire the small business just like myself. And business to business, especially small business to small business, is wonderful because the small businesses are the backbone of at least the United States. And as we help each other, then we all grow together. So I'm going to say, let's utilize the home based businesses that are around us. Start networks, business networks, even global business networks. These are ways that we can help each other grow. Find people that have something that will complement you. So, my mentor talks about how to market and how to grow a business. And when we were speaking on stage together, my part was when you start making all this money, here's how to reduce your taxes. Thinking of taxes, let's talk about some great tax deductions for businesses. When you look at a business, first of all, you have several types of business entities. You have the sole proprietor, which is just one person. You have the partnership, which is two people or more. And you have two types of corporations that are usually used, S corporation and C corporation. Now, keep in mind that corporations are separate entities. The partnership's not separate, and the sole proprietorship is not separate. I recommend for my clients to have a corporation if they're in some type of if their business has high exposure to lawsuits. For example, I had a company out of Texas that was my client, and when I first started talking to them and interviewing them, I found out that they were a sole proprietorship, and I immediately told them, no, you need to go and form a corporation because if you're sued, they're going to take everything, including your personal assets, your house, and everything. However, if you're a corporation, they'll have to sue the corporation, and it will be harder for them to get your personal assets. So these entities, we figure that out at the beginning of whatever business they decide to have. But each one of these entities has something in common, and they get to write off basically the same types of expenses. So, of course, the easy ones are advertising expense. You have your supplies, you have your mileage, your insurance, your professional fees. Like my wheelhouse is not marketing. I hire people to help me with that. My wheelhouse is not trying to figure out how to build a website. I hire people for that. So that's another expense. And you go on, you do get a chance to take your travel as a deduction. There's something called edutainment that's really fun. When you are in some kind of a professional society and they have trips, you get to sign up for these trips to take continuing professional education. So, usually during the day and especially the morning, you're taking classes, but in the evening, you have to yourself. So, it's sort of like a vacation that you have, but it's tax deductible. You're always looking for ways to make something tax deductible. For example, if you're going to go to Orlando, let's say you take your family to Universal Studios, you want to make that partially deductible, you set up a meeting there. You meet with your clients that are there, or you gather up others, potential clients, and have an informative meeting, meet with clients. So maybe if you're going to be there for 4 or 5 days, you have 4 or 5 activities planned that are business related. At that point, at least your airfare and your portion of the housing is deductible. So you've made something of that. I love deductions like that. One of the ones that I used when my children were younger, You can have your children work for you. They need to be between the ages of maybe 6 and 18 years old. You have to pay them. They actually have to do the work, but they can work for you if they're your children, and you don't have to take out any federal tax, any state tax, any of the Social Security or the unemployment tax at all, up to whatever the standard deduction is, which is maybe like 14 or $15,000. So if you have three children between the ages of like 8 and 18, you can literally write off $45,000, pay the children. They can use that for their tuition, they can use that for vacation, they can use that for clothes or whatever. And in cases where people are very sophisticated, the children take that money, they go out and buy equipment for the company and lease that equipment back to the company. So that child has made $15,000, but they also have rental income coming in from some equipment that they bought from the company. Now, at that point, if the number starts getting big, that child does have to file a tax return, but it's still worth it. Teaching your children how to become entrepreneurs is priceless. You're teaching them how to make money work for them instead of how to work for money. That's one of my favorite deductions. I actually got a call from the state of Georgia, and they said, you have two W 2s here because, yes, you have to give the children W 2s. You have to fill out the timesheets. And I went a step further and I made sure to have pictures of my children working, sweeping, doing whatever on online. And when I had the CPA firm, I allowed my clients to bring their children because we had a big jungle gym in the backyard and we had a big screen TV. So my children got paid for entertaining my clients' children. But when the state of Georgia called, she says, you have two W 2s here, but they don't have any tax taken out on them. So I explained to the lady at the state of Georgia just what I said about writing off your children. And she said, can you send me that information? So she was into making sure that she knew what would help herself and her family. Another one of the deductions that I like, and this one is for corporations. There's something that Congress made up for their wealthy friends, and it's called the Augusta Rule. There's a golf tournament in Augusta, Georgia called the Masters. Every year, golf teams come from all over the world to Augusta, and there are large mansions around this golf course. So those wealthy people down there went to their Congress people and said, "Hey, we want to rent our homes out to these golf clubs like the one in Japan or the Australia, New Zealand, Switzerland, all these golf clubs. We want to rent our house out during the Masters, but we don't want to pay tax on it." So, boom, Congress made up the Augusta rule. And it's not just for them, it's for everybody. For 14 days, and only 14 days or less out of a year, you can rent out your home and you get a tax deduction for uh, whatever you spend during that time, but you don't have to take any money and report it to the IRS. So you can use that as an individual also. It just has to be less than 14. And I use that for corporations also because a corporation can rent to the individual owner of the corporation. So I have my clients that own corporations write up agreements that the corporation is going to use their house 14 times out of a year. So that's a once a month board meeting plus two special meetings. I have them go online and find out how much per hour the rent is for the hotels and the rental spaces in their area. So, for example, one of my recent clients, the rent was $200 an hour. So that's 8 hours. You have to rent it out for the 8 hours. So that's $200 times eight, just $1,600. And you get to do that 14 times. So I think that was $22,400. So as long as he has 14 meetings at his house this year, he's going to write off $22,400 on his corporate tax return. The corporation is going to pay him $22,400 that he can pocket without having to pay tax. So we need to understand the tax law, and we need to figure out what will help us as small business owners and what will also help us as individuals. Now, that's a corporate one. As far as having your children work for you, that has to be a partnership that's owned by family members, spouses, or an individual. So corporations can't do the children one. But there's ways to get around that. Someone asked me, hey, can I have my grandchildren work for me? And there's a kind of complicated strategy, but yes, you can have your grandchildren work for you and be able to write that off also. These are strategies and tips that have been used for decades by people that know, or actually by their accountants, because their accountants and their lawyers get paid thousands of dollars every year to make sure that these people have the tax deductions that they can take. And that's why these people get paid, for finding those deductions. And as far as growing what you earn, also the Rockefeller Foundation, Ford Foundation, Kennedy Foundation, all these foundations have been around for centuries, and people don't know how to start trust and foundation so that their families can build wealth. There are two things that a trust can do that a corporation and an individual cannot do. A trust can pass on the gross income to a beneficiary. Just pass it on without tax. They can also donate 100% of the gross profit to a charitable organization. So if you're donating that, or if you're passing it on to another trust, then your individual or your partnership is not taxed. It passes on. And if you're putting that into a private family foundation, then that private family foundation is getting the money. You aren't responsible for the tax. They don't have to pay tax because they're a foundation. All they have to do is make sure that they spend about 5% of that per year on something, and that other money can be invested in the foundation. So when Warren Buffett and all these others are saying, I'm not leaving anything to my children, I'm not leaving them an inheritance, that's kind of like, a deception, because this money, and I do have a letter from Warren Buffett to his daughter, where his foundation and his company is giving her foundation this money, these stocks, and she can live out of that foundation. I like to tell my clients to pay attention to what the wealthy do. If you do what they do, you can have what they have. The struggle is not real unless you don't pay attention to what the wealthy are doing. There was a woman a long time ago named Leona Helmsley, and she said only the little people pay taxes. And everybody got mad, but she's telling the truth, because those of us that are busy and we don't understand what's going on, and we're relying on accountants and CPAs, and these people aren't trained. When I went to school for accounting, I have a bachelor's in business administration with a concentration in accounting. I didn't learn these things. They didn't teach me these things. They taught us how to do tax returns and how to do audits, and not how to help people keep, protect, and grow what they earn. When you learn these things for yourself, and or when you hire somebody that knows that, you can save hundreds of thousands of dollars in your business every year. That money can go towards, some real estate somewhere. For example, in Croatia, how about having a second home in Croatia? I have a second home in Costa Rica, and I go down there at least 4 times a year, because stress is real. So that's what I wanted to say, making sure that you understand how important it is to learn for yourself and your family how to keep, protect, and grow what you earn. So I've been at this a very, very long time, over 35 years, believe it or not. And I've learned to deal with people that are middle class, people that are in the upper middle class, and the wealthy. And what I've done is I put some resources together. My website sherrypeeljackson.com, and you can contact me at connect@sherrypeeljackson.com. If you message me on Instagram the word tax, then I can send you my very first book. I've written 10 books, but my very first, very simple book called Basic Financial Survival. And it's a book and a workbook that I put together to help people that are starting from the beginning. You cannot assume that someone that has a $100,000 business knows what they're supposed to do with the finances. And unfortunately, a lot of times that's why most businesses fail within the first 3 to 5 years. People know their business, they know what they're doing, but they don't know the financial part. So text the word tax, I'll send you the book, and you can find out about any of the packages that I offer at sherrypeeljackson.com.
21st Century Entrepreneurship with Martin Piskarik.
Imagine a space where triumphs, trials, and tales of entrepreneurship come alive. Welcome to the 21st Century Entrepreneurship Podcast, a gold awarded journey hosted by Martin Piskarik, connecting with listeners in 95 countries and ranking in the top 0.5% of all podcasts. Join our exclusive community, elevate your perspective, and embark on the path to success.